2021, I believe, is going to be an inflection point. We need to look no further than the fresh commitments from government, from the top emitting countries, the imminent approach of COP26, and a real private sector focus on embedding climate change into investment decisions. 2021, I believe, will be the year of climate action. That's a quite optimistic view, and I think comes with a warning. Our generation will be the first to feel the full effects of climate change and has the last to be able to do anything about it. The 2021, in my view, is a year when transition must become transformation, where we must deliver on the promises and commitments we have made to a low carbon future. In that context today, we're going to be focusing on commercial PPAs in Europe. Global renewables are the bedrock of a low carbon future. In onshore wind and solar, there will need to be a focus on scale, route to market, and project innovation to achieve improved returns and new market entry. In offshore wind, markets are being incubated now in Europe and the US and Southeast Asia, but offshore wind definitely has gone global. Key markets, including in Europe, in the multiple hubs in North America and Asia, with European majors likely to dominate install capacity, but local and specialist platforms emerging. And there's definitely opportunity in offshore wind from additional value creation through grid optimization, sharing of storage, curtailment, management, and sizing. But in all these cases, investment is critically underpinned by some form of route to market, which helps investors consider and manage long-term commodity price and other risks. And that could be government-mandated power purchase agreements or tariffs, commercial power purchase agreements, or indeed merchant products. And exactly why today's webinar, I think, is so topical. And our focus today is going to be on commercial PPAs. I have with me today two leaders in the European commercial PPA space, Shane Heffernan from Baringa, who leads our strategy, markets and advisory work in commercial PPAs and has recently led work both for the European Investment Bank and Irish government on commercial PPAs. I'm absolutely delighted to welcome Dominik Ruderer, a senior energy economist with the European Investment Bank. Dominik has previously worked for EnBW and DII in Germany as an expert in energy projects, diligence, renewable projects, long-term fundamentals, corporate PPAs, and very, very welcome, Dominik, to you. Perhaps you'd just like to say a few words on yourself and the European Investment Bank.
Thanks, Ilish. So thanks for having me on this webinar. It's a pleasure to be here. I'm happy to be here today and to talk about this timely and also very important topic for the sector, but also for us as EIB. As you said, PPAs are not only very high on the agenda of policymakers, but they're also a commercial reality at this point in time, and we will see a bit more about that. Quickly about the EIB, we are a public bank owned by the 27 member states of the EU, based in Luxembourg. 90% of our lending is inside the EU, 10% outside. We lend approximately every year 63 billion euros to projects. Thereof, roughly the average over the last years, 12 billion euros in energy and between 4 and 5 billion to renewable projects. We lend to all kinds of renewable energy technologies, solar, wind, hydro, biomass, geothermal, but also we do also more important, more innovative things such as floating offshore wind. We offer a wide range of lending products from corporate over intermediated finance and project finance to quasi-equity. And I think we are generally well known in the sector. Maybe just one quick word about myself. I'm not a banker. I'm an economist by training and work as an energy economist for the EIB. And Ilish basically said everything that needs to be said. I do project due diligence for the bank, but also work on a wide range of other sector topics. Looking forward to the discussion today.
Thanks, Dominik. There's some excellent bankers in the room. I'm sure economists. I doubt there are any great economists who are bankers, though. So perhaps we'll lead the discussion on that towards the later part of the discussion. So together, I think with yourself and Shane, we'll be exploring where the commercial PPA market is, a kind of state of the union across the EU. How big a role will it play in meeting 2030 targets? How has the market evolved over the last few years, and what lessons can we learn from it? How do off-takers' needs differ? What's the role of utilities? Some real-world experience across Spain and Nordics. Some of the major barriers as well that you both see to commercial PPAs, but on how you define that and where these barriers are being surmounted and what the role of different institutions might be in that. So really packed agenda. I know you've only got a handful of slides, which is great for these webinars, for the audience. We really encourage them to be interactive. I know it's we've set them up in teams to enable that interaction rather than a speech from the presenters. But could I ask that if you do want to engage, we'd encourage you all the way through to engage. Please post questions on the chat or use the hands up functionality virtually in Teams at the top of your bar there, just to flag if you've got a question or a comment for anybody in the room, and do use that, and I'll pull you in right the way through. Don't wait to the end. Please ask questions as you go along. And I know we've got some natural pauses for that, and we'll aim to monitor both channels. So with that, I'm going to hand over to Shane and Dominik. Shane, I'm delighted to be able to hand over to you to start the beginning of the presentation, and I do encourage everyone to make it really interactive. Thank you.
Thanks very much, Alesh. So as Alesh said, we'll go through sort of level of activity, drivers, the market size, potential challenges in some different states, barriers, and what needs to happen next. I guess to begin with, in terms of levels of activity up until now, we were in the habit of tracking disclosed PPA deals on various industry news websites, and so we've sort of built up this picture of levels of activity within the EU. And I guess, as many of you are aware, it sort of all started over 5 years ago with some of the Scandinavian countries and the UK doing some of the first PPAs, and those were very much centered around sort of heavy industry and data centers. And then the market sort of really took off in 2018 when we saw a wave of utilities start to get involved, and that was primarily in Spain, but also more generally in sort of Western Europe and in Scandinavia. And then today we end up in a situation where I believe 16 different countries across Europe have now successfully made disclosed commercial PPA deals, and the sort of the level of volume under PPA is equivalent to something like between 1% and 2% of overall industrial and commercial power demand in Europe. So it's material, but there's also room left to grow. I guess in terms of the year just gone, the deals remained relatively robust through 2020. The number of deals remained robust. Obviously, this is in spite of much poor business confidence with COVID. And we did see less utility deals, which may have been a result of that. Meanwhile, corporate PPAs, you can see on the right-hand side chart, sort of remained more robust. And I guess the couple of ways to read into that, but one is that while the impact of COVID may have dented risk appetite in the industry, it certainly hasn't dented green commitments among corporates. Not shown here, which is another thing that we sort of picked up just looking at individual deals, is that you're starting to see more offloading from utilities to corporates, with utilities having taken positions on long-term PPAs, and now being able to offload those to end users as they gear up their green commitments. And we'd probably expect to see more of that in places like Spain, where they're starting to introduce incentives for more end user participation. And it'll be interesting to sort of see if those incentives extend to other European countries. I'll just pause quickly there if Dominik or Alesh, you want to add anything, or if there's any questions coming through before we move on to the market size potential.
Yeah, maybe just to highlight you were quite comprehensive, Shane. So I would just like to, there was a massive increase, and when we look at our lending activity, we can also see starting in 2017-18 that when it's really took off also in our portfolio, we looked at that now PPA deals have not become, I wouldn't call it the standard, but they are a substantial share of the things we are doing. Secondly, it's Spain. You see a lot of countries in there, but Spain is there for a couple of years now, and it's actually a very fascinating story that basically from nothing, Spain was coming back to being the biggest renewables market in Europe, but also the biggest PPA market when you look at those couple of years. And thirdly, it's also what's striking to me is also this persistence of corporates. We also, as EIB, have now, I would say, a majority of the PPA deals we have done are utility-backed. But we also have now a number of deals with corporates from big tech, telecommunications, steel, aluminium. Not so much the more exotic players. I know also Baringa is working with. But these are really the striking things for me. So far, I would say solar, you don't see this in the chart, but maybe Shane can say us a couple of words in terms of technologies. I mean, solar is for me the big winner in terms of PPA deals, but we also have done quite some wind deals as EIB. And the interesting thing for the next years, I guess, will be also looking at offshore wind, whether we will see a couple of offshore wind deals or whether it's either too early for that or that really stays the niche in the market.
I think just two questions for me, just to get things started, and then we'll definitely move on, I think, is Dominik, for you, maybe just how do you see the market defining commercial PPAs? What the kind of, is there a difference in corporates and commercial? And then the second question was, you mentioned Spain there. Do you think Spain's a bubble, both for renewables and corporate PPAs? Do you think it's going to burst in the next year or two?
So I start with the second. It's clearly the multi-million-dollar question. First of all, it's a fascinating story. There was nothing for years. Now we see a market with great fundamentals. So we have excellent renewables resource, we have abundant land, we have a very well-developed grid, and we had for the past 15 years the highest wholesale prices compared to all other European markets. It just gives the market fundamentals are right. I think that's also what fueled this development. So now, is it a bubble? I wouldn't necessarily call it a bubble, but will we see growth in the market? I'm sure we will. We also see the auction results recently, which just showed that we have a lot of very good projects in the market, which could be developed at very low costs. But do I really believe that the growth will be ongoing as in line with what we've seen in the last years? I personally am a bit more skeptical, and I think we will see it at a lower level, at least in terms of unsubsidized projects. So in terms of PPA deals, we have seen that Spanish utilities are loading their balance sheets with a lot of PPAs. They also somehow have to offload it. They load it with a lot of unsubsidized projects, so they also need to find counterparts for that risk. So that will be something interesting. I wouldn't call it a bubble, but yes, do I expect it to continue like this? I'm skeptical. Commercial PPAs, the difference to corporates. We also supported by Baringa. We opted for the term commercial because we wanted to differentiate it from subsidized PPAs. So we really wanted to look at the private sector taking up long-term price risk in the sector. And I think that's what the PPA market ultimately is about. It's about the availability of capital to take up this long-term market risk. And this, for me, ultimately defines the commercial PPA market. So it's not so much is a corporate or is a utility the counterpart. In the end, the market risk needs to be absorbed by a balance sheet. And you can either do this via an intermediary, that's the utility, or you can do it directly. Because you might want to have more additionality as a corporate, you want to show your engagement more explicitly. Or there's really an economic point because you're a big energy offtaker.
Got it. It's really helpful.
Scott.
Okay, so let's move on.
Sure. So I guess the next thing we want to introduce is the idea of how much potential there might be in the market, and sort of to get at this, we've considered, well, how many PPAs do we need as a means of reaching our target, and how likely are we many to get based on offtaker demand? So we've thought of the market in terms of four very simple drivers. You know, on top you have your renewable capacity targets that drive the sort of level of investment in the pipeline, and these are sort of set in policy out to 2030. And then you have, okay, well, to meet those targets, how much of that is going to receive government support? And will government support in markets where renewable technologies are already competitive, or will they stick to markets where there's a clear gap between the price of renewables and the market power price? And then the third element of that then is merchant risk appetite. So if you think about the entire renewables portfolio, the entire renewables deployment across Europe as a big portfolio, how much of that is willing to be left to merchant risk appetite, and sort of the gap then between that level of tolerance and what is supported by government is where PPAs almost need to step in and provide that risk capital. And then the demand side of the equation then depends on sort of why off-takers are seeking PPAs and to what extent they're able to execute those PPAs. So we've used these 4 drivers to create very simple, crude scenarios, and we've created sort of 2 extreme scenarios here of what we think the potential for the market size for PPAs is. So sort of stepping through those 4 drivers, if you assume your renewables capacity targets are fixed, and you make some crude assumptions around level of government support. So in this scenario here, we were estimating a sort of a maximum size for PPA offtake where government support is only given where renewables are not competitive. And you're pretty conservative about merchant risk appetite, so you assume generators are only willing to leave up to 10% of their volumes uncontracted. You end up with an appetite of around 480 terawatt hours under PPA by 2030. So quite a sizable chunk of the overall renewables deployment by 2030, as set by EU capacity targets. You also see then even if you're quite bullish on off-taker demand, so you assume all off-takers that are sizable enough to sort of have an energy footprint that matches a renewable asset, and you assume that they're willing to hedge at least 25% of their volume on PPAs, you end up with a demand of around 290 terawatt hours by 2030, and that's not taking into account some of the barriers we see around things like credit risk. So there's potentially a gap there between what generators need and what off-takers want in this scenario, and that's something that you could look into bridging by addressing some of the barriers we talk about later on. So alternative scenario then is sort of, well, what if government support is much higher? What if all the announced support is followed through, and where it's not announced, i.e., sort of towards the back end of the decade, it continues at the sort of current auction levels we see today. And on top of that, what if there's more merchant risk appetite? What if generators are willing to leave up to 35% of their volumes uncontracted, representing a world where there is more risk capital in both generators and their financiers? And there you see that even if you're quite conservative on off-taker demand, you say you're only relying on organizations that have signed up to RE100 and their stated ambitions, you get quite an even match, and you get a PPA market that's still quite material as a proportion of the overall renewables capacity targets. Still an important part of that story, but much less so. I'll sort of pause there. I'm conscious that was quite a quick trip through a lot of numbers. But Leszek, Dominik, I don't know if you have anything to add on that.
Dominik, please, after you. Yeah, I'll let you pick up on responses and bills and any views from your perspective.
Yeah, I think what the whole market sizing exercise has shown us that so first of all, there's quite some uncertainty on the future size of the market, but still within this uncertainty, I would expect the PPA market to be sizable in the future. However, also not that big as some might want to believe it. I mean, we see here that it will be between 10 and 25% of all, or 10 and 20% of future renewable capacity, given the 2030 targets in the EU. So it's up to a fifth or fourth of, and Shane, correct me if I'm wrong here, of the entire volume. I would see upsides to that. Upsides might be if we have some government regulation supporting the PPA market. We see that now in some countries, like in Spain's first proposal, in order to get basically more PPA demand on the market. Then later on, I guess we will also tackle the question of, can hydrogen be a a good off-taker for new electrolyzers being off-takers for PPAs. However, I also see a downside, and the downside is increased renewable targets, more support to renewables, so basically squeezing the PPA market out.
Yeah, I think that's spot on. I think the only build I've had is two builds. I think if this analysis is right that we produced recently, and we've got the country level analysis as well, which is really insightful, that sits behind this. I think it says there is slightly more demand than there is potential. Then there should be theoretical supply from generators, given the available government routes to market. I think that's one conclusion. Number two, the gap is relatively small. You know, it's 10 terawatt hours or so. So I can't infer much in terms of supply demand balance for auctions, for example, including corporate PPA auctions, which this may imply. And a third implication, I think, is, you get 150 terawatt hours of potential demand from off-takers. That's somewhere in the region of 17, 18 gigawatts. So the market size to go after is still very big here, in terms of this is just the next 10 years. So that's theoretically only 9 years worth of contracting. So it's quite a big market here, outside of government support. And I think that was probably the third or fourth conclusion I reached, Dominik, which is government support is not going to be sufficient to meet the renewable targets we have. It will require private sector action through merchant risk or through commercial PPAs. And therefore, this market needs action in order to fulfill that potential. Would you agree with those conclusions?
Yes, I mean, we will see both in the future. Yeah, I think I personally don't believe in a fully unsubsidized future, but I also believe in a future where we see material PPA activity. So this is also something where you, Elish, Shane, really helped me to understand what additionality means. And that there's basically, beyond government targets, there's from the private sector a quite big, quite material push towards developing renewables capacity. And I think this is here to stay. This won't go away, and this will, in the end, trigger a sizable market.
Yeah. And I think the last point was, Shane, I think you're about to move on, but we do have a question actually, which we'll take as well, which I'd make is, I think the focus on corporate PPAs is too narrow. All of the talk in the industry is around corporate PPAs. I certainly view that as an important sub-segment of the market, and particularly where good credit is available with long-term tenured contracts that can make sense. But I think equally valuable is going to be what I would call the utility or commercial PPA market, the 5 to 9 year horizon, which can allow some projects to be built that otherwise would have had to take either merchant risk, so fully exposed, or would have to wait for a government route to market or a corporate PPA. And I think that's a really important market that's not well understood, and we spend a lot of time talking about that. But I think we're about to come onto it and thinking about some of the barriers. But I just have a question from Shyam, which I don't know whether, actually, Shyam, if you take yourself on mute, you can maybe just ask the question directly to Dominik and Shane. Shyam Sankar from GE, which I think addresses that a little bit as well, which talks about the kind of replacement PPA market. If you can't take yourself off mute, Shyam, I'll
Thanks, Elish. Hi, Dominik, Shane. Yeah, I've just posed a question on additionality. It's obviously a phrase that we hear a lot of, and I appreciate that additionality can today mean different things for different corporates. There's no one definition of what that phrase means. But over time, do we see it becoming something that might be regulated, where companies have to satisfy certain ESG targets, including additionality, and then there might be a definition around that? And then do you see, looking forward, we at GE, we've executed a few PPAs. In the latter half of that decade, the owners of those projects may be looking to replace them as they mature. Will there be a market for secondary PPAs, given what you've just shown, or replacement PPAs, given what you've shown about just how much demand there is? Or do you see a sort of two-tier market sort of occurring over time? And that sort of leads me on to a second question as well, which I'll ask now, which is, can PPAs be executed post-FID? I know some of the big data companies, maybe Amazon, others, they need that PPA in place before the FID decision. But sometimes the timing of construction starts can't be perfectly aligned, and there might be reasons why you can't get the PPA in place. So just want to understand your views on additionality a little more there, please.
Yeah, sure. I'll have a crack at that one. I think you're right. Additionality does mean different things to different people, and it's sort of something that sprung up from major tech's need to demonstrate their contribution to the energy transition. But as that contribution moves away from the Microsofts and the Googles and the Amazons, you would expect it to morph. I guess the question is, will it morph without, into a broader definition, without some input from regulators either at an EU or a country level? I think that really remains to be seen. I think, when thinking back to the work we did for the Irish government, it's additionality to those who are, maybe one level removed from PPAs, as a lot of policymakers are, is a relatively new concept, and they're still grappling with it, and they're still coming to their own definitions of it. I do think if we can move to a broader definition of additionality, then I would expect some of your other 2 points around, being able to do PPAs for assets coming off subsidy, and being able to do PPAs post FID, those should come into play more. And I think those should play more of a part because they ultimately do facilitate recycling of capital.
I can maybe add on the last point. So historically, I would have said, and that was my initial thinking, I thought about PPAs purely from, does it economically make sense, regardless of any additionality? You're a big energy consumer and you want to have access to cheap power. Then I would say it doesn't matter if it's a replacement PPA, if it's a post-FID PPA, or it isn't. What we have seen through a lot of interviews Shane and colleagues conducted, but what we also hear a lot from utility clients we are supporting in developing their portfolios is that in particular corporates with strong brands, and not only the tech companies, but also many others, they want to see these prior FID PPAs, and utilities with big balance sheets are well positioned to do that. So we see a lot of projects financed on a corporate basis, and then they're basically project PPAs, but still the project is still financed on a corporate basis. However, at the same time, we see now for more and more of our clients, utilities, but also smaller developers, that investment funds also, that they have sizable project portfolios. They take FID, they start construction, and then only in the meantime they sign up clients. It's a strategy very much different from this whole additionality narrative, but ultimately only time will tell us. To be honest, I'm a bit clueless what we will see. I think it's important to see that a share of the market is driven by additionality. That's my main takeaway. That when you do the market sizing exercise, we can see that a sizable share, I don't want to say the majority, but a sizable share has a strong additionality narrative and probably needs PPAs prior to FID.
And maybe just to round this point off as well, I think there are corporates who are willing to do these shorter or less additional PPAs. I don't think every corporate wants to sign up to a 15-year PPA on a pre-FID project. But it is, I guess I see it as regulators in collaboration with utilities, because I think utilities are probably the entities that stand to gain most from that broadening of that definition, and sort of will step in to productize PPAs more. Utilities and regulators in collaboration are the key to kind of cracking that.
Excellent. Shane, we've got a couple more questions coming through, but why don't you just cover the next slide and then we'll take a couple more questions that have come through. I think it's a good time to do that. Let's cover the state of the union amongst different countries.
Sure. Yeah. So here we would sort of want to talk about, what the landscape looks like across different countries, and we'll sort of stick to the kind of supply versus demand paradigm that we had on the market size scenarios to sort of illustrate some differences that we saw across countries from talking to the market. So looking at this simple 2x2 matrix, in the top right you see markets which we sort of see as best in class in Europe, and we'll welcome challenge to that, but we see them as they've got no major policy or sort of economic challenges that stops either developers or off-takers coming to market. So the economics for renewables are relatively strong. The pipeline for renewable projects is healthy, and there's a healthy base of large energy users with strong green commitments, and that's reflected in relatively robust volume of PPA deals we've seen so far in those markets. Then in the top left, you've got some markets like Poland and Italy where the economics are quite good, but there are some obvious barriers to off-takers. So we've heard, in Italy that you've got some problems around zonal price risk between all the cheap renewables in the south versus all the economic activity that happens in the north. While in Poland, you've got again great economics, but grid and network incentives are sort of geared more towards on-site development rather than through grid utility scale PPAs. Not that hasn't stopped some PPAs starting to come through in Poland, which we've seen last year. So there is real opportunity for more PPA activity, or to sort of really accelerate PPA activity if you can remove some of those barriers in those countries. Then in the bottom right, we've got countries where off-takers are struggling to find a project. So France and Belgium, you've got very strong commitment to government routes to market, and there's limited pressure to go find PPAs among developers as a result. Similarly, in Ireland, there's an expectation among developers that auctions are the bigger prize because the levelized cost of renewables there is still higher than the wholesale power price. And this is in spite of demand, strong demand from off-takers in these countries. So France, has the advantage that it's got a legacy among its industrial user base of doing long-term PPAs through its nuclear fleet. And Ireland is advantaged in a slightly different way. It's got a lot of multinational life sciences and data centers who have strong green commitments that they want to action, but can't necessarily find a competitive project that's in the money. And then finally, on the bottom left, we've got some markets where we think it's just a bit early days. So these are markets where, we need to see more firm commitment to auctions to sort of increase confidence in the pipeline. And once that gets up and running, we should see more appetite from off-takers as the sort of the transition towards renewables takes hold more. And just to slightly caveat this, we did look at 9 of these countries in depth, which we've kind of summarized here on the right-hand side. But we've been a bit more speculative with some of the other flags you see on the 2x2. So please feel free to challenge those if you've got closer experience. I'll pause there on that one.
Dominik, any thoughts, any real world experience and what you're seeing out there as well?
So, I mean, just to reiterate, on Nordics and Spain, I think fundamentals are just good. That's why I think we will see continued growth. In Spain, the big question is how far will capture prices and how quickly, I guess that's more important, how quickly will capture prices go down. But otherwise, we will see growth. Then, of course, in all countries where we have very strong support schemes, the PPA market will remain a niche. The two most interesting, let's say, the most interesting market geographically for me is Poland. That's because you have this. It's a heavily coal-based industry with a lot of international companies that might want to show that they are green, and they only can do it via PPAs because the national power mix is basically so carbon intense. That's an interesting one. The other interesting is the technology. So that's the future of offshore wind. They're mainly, I mean, I think we have a couple of guests who are active in offshore wind. And it's mainly what we've seen in Germany, but also in the Netherlands, CO subsidy auctions. So I understand all the players who are in the market with CO subsidy auctions have the balance sheet to develop the projects on balance sheet, so they don't have to rely on a route to market. But still, this is for me one of the big unknowns how it will develop, and whether we will see sufficient PPA activity to actually lift off some of these projects even on a project finance basis.
That's great. Thanks, Dominik. Actually, in a great time, I think AJ's got a question. AJ, I wonder if you take yourself off mute, happy for you to ask a question, or I can ask it on your behalf.
Hi, Shane, can you hear me?
Yeah.
Hi. A quick question, a short one as well. Do you see any traction for synthetic PPAs, which are kind of price hedging instruments within the European market, especially in Spain, because I think that forms a bigger chunk of that demand? Thanks.
Sure. I mean, I'll certainly defer to Dominik on sort of real world experience with synthetic PPA opportunities. I guess I don't see too much reason why you shouldn't have them. I know there's some concern around how they're treated on the accounting books of the off-takers. You know, are they a derivative or are they a contract? But I think apart from that, I don't see any major barriers to doing synthetic PPAs within a specific country. I think where the challenge comes is if you've got an off-taker who has demand in one place and is considering one of these synthetic PPAs in another place. So a classic example might be a sort of a big retail brand which has a relatively disaggregated load demand across Europe, but might be considering a PPA for all of that in Spain. And that, I guess, concentrates their power price exposure into one market, which introduces a risk. And is also that there's a sort of a softer element of whether it's justified in terms of their social objectives. So what we've anecdotally heard from corporate off-takers is they don't want to be doing a PPA in a country where they don't have significant load demand.
Super, thanks.
And maybe just to add, this is not a full empirical sample, but I was just thinking about the PPA deals I was involved in during the last years, or last year, and I think the majority of the utility deals actually were, but those were all in Spain, were synthetic PPAs, and the majority of corporate deals were actually physical PPAs. I don't want to say that this is what you see in the wider market, but at least that's what I've seen, what I saw over the last maybe 18 months.
Interesting.
Yeah,
great.
Thanks, AJ.
Thanks.
I think a related question for Shyam on the cross-border PPA. I think it's the same question. You know, could demand for job? I think the answer is yes. And we've been involved in 4 corporate PPA processes for various companies where there have been synthetic. I think you're right, Shane and Dominik. I think the challenge is not necessarily whether they can do it, or there is some balance treatment considerations through imputed debt. I think the issue is primarily one of, am I an international player who's got operations in all these countries in which I can spread my PPAs around a bit, or am I tied really to 2 or 3 countries, and really I want to prove locality? So it comes back to an additionality argument, and I'm going to introduce one more called locality. So if I'm a UK-based player or a Poland-based player, I might actually want to contract with the Poland asset, even if I could buy it more cheaply from Germany, because I want to prove additionality and I want to prove locality. as well. And I think that is becoming an important consideration in some PPA processes outside of economics and outside of counterparty and volume risk.
Yeah, I think the word locality really sums up what I was trying to say on that. Yeah.
So let's should we just move on to the last couple of areas around risks and some of the barriers and some of the insights there, and then we can take a few more questions.
Sure. Yeah, and feel free to move me along if we're running out of time. But essentially, we tried to condense what we see as the key barriers in the market into as short a list as possible. And what we came up with was this, where sort of top of the list almost is price risk. Who takes it? And obviously that's a clear barrier across most markets. It prevents less secure corporates and utilities with weaker balance sheets from procuring a higher portion of their demand via long-term PPAs across all markets. And a lot of corporate off-takers will simply not be used to the idea of hedging any portion of their energy demand further than sort of 2 to 3 years out, where you've got liquidity in power markets. Number two then is probably more specific to offshore wind. So the sheer size of offshore wind projects and the time it takes to get them built is challenging for corporates who want a deal as soon as possible to meet their own internal green objectives. And it can also be an issue, for corporates with disaggregated demand, as we've just talked about, where they don't want to hedge over any single market. So that can be, that can be an issue in some cases. Number three then is one of the big ones. It's creditworthiness. So obviously that prevents a large number of corporates with suitable energy demand, but lacking an investment grade balance sheet, and even to some extent those with an investment grade balance sheet who don't want to put their credit rating at risk with the PPA. We've seen some removal of that risk being demonstrably effective in Norway, where they've got the credit export guarantee, and we see Spain is now trying something similar. So I guess it remains to be seen whether other countries follow suit, or whether private financial institutions can come up with some kind of credit risk management product. Four then is contract complexity and length. This comes up a lot, but we think of it more as a soft barrier. It puts inertia into the market because these deals take up to a year to do, and it prevents corporates with strong green mandates but limited understanding of energy markets, particularly where the presence of utilities willing to sleeve at a reasonable cost is limited. Then 5 is hedging availability. So we do see in markets like the Nordics and more recently Spain, the rise of long-term PPAs has also given rise to more liquidity for products that manage some of the exposure around shape and volume for those. But most markets still remain in a sort of a 2 to 3 year liquidity window, and even some have additional basis risk to consider. And then finally, additionality, which we've been over to some extent, and sort of corporate recognition. This is a barrier. There's this wide gap, as we've said, between purchasing guarantees of origin and booking a very long-term PPA, with no recognition of the middle ground for shorter PPAs or for off-subsidy PPAs, post-FID PPAs, which would still help the market to recycle capital. I might just go on to just make a few notes on off-takers as well, because I think up until now we've sort of treated them as one big homogenous group. In reality, when it comes to PPAs, they're not. They differ in their level of sophistication in power procurement. They differ in their green mandate. They differ in their risk appetite for taking long-term bets on power, and they differ in their creditworthiness. And so what we found in talking to the market was some of the differences you see across these kind of 4 columns by different sectors. So As an example, the data centers and consumer goods and retail, consumer-facing brands, for obvious reasons, have slightly stronger green mandates, and more upstream industries are kind of catching up to that. Risk appetite can vary depending on sort of how big a component power procurement plays in the overall cost base and the overall competitive strength of companies. So again, if you think more consumer brands are based on sort of product innovation rather than material cost based, so they've got a potentially a bit more risk appetite than some of the very commodity based heavy industries. And similarly, data centers are well suited to doing PPAs because the economic life cycle of the data center is long term and fixed. And then finally, creditworthiness. Some of these sectors are inherently populated by very large players and concentrated, and others a bit more disaggregated. And that means a less population of creditworthy parties. So I'll pause there before we come to the.
Well, yeah, I'd love to get Dominik's thoughts on barriers. I think that's a really key role for key issue in the industry, and also maybe an interesting insight from how the EIB and other institutions can play a role in removing some of those barriers.
Yeah, happy to do so. So first of all, yes, I mean price risk. I think that's what it's about. So as a lender, we of course don't like risk. We don't like market risk. We like the 20-year feed-in tariff without any risk, but that's not the reality anymore. We see what's going on in the market. It has become standard to take a share of merchant risk. We call it residual merchant risk. We as EIB don't finance full merchant projects, but this is also what we see in some markets currently, and a lot in Spain. We take some merchant risk, take our own fundamental view on the market. So we're not only taking some price curves, but we also have our own fundamental view reflecting on that view, whether we can take that amount of price risk. And I think lenders play a role, but also some others. Point two, creditworthiness. I think that's really the key of enlarging the market. So we see a lot of corporates that might not have, currently an investment grade rating is the entry card into a PPA. We see a lot of corporates with an interest in such PPAs that have a very strong green mandate, but basically cannot be the counterpart in a bankable structure. And we saw this very interesting example in Norway. We as EIB also went out 2 years ago with our energy lending policy and said this is an area we want to engage, and that's also where Ilesh and Shane helped us get our thinking going, shaping our thinking on how we can support that view. And I think there's a role for the public sector, for public banks to issue something like this, but I also think this is still a long road we have to go to really shape it. But I think this is necessary to just get more liquidity in the market. And then, of course, we heard it before. It might make sense to regulate additionality, to give it an official stamp. But also here, I think we still have some way to go.
It's really helpful. I think this is such a critical area, which is I see these being negotiated every single time for every single new contract that gets signed, Dominik. I think some level of standardization, I'm starting to see both the advisors, the counterparties and the off-takers impose on this, because you can't vary all of these elements all the time to be bespoke in every contract.
Yes.
It involves a costly process. And secondly, I think the point you made around lenders starting to pose certain requirements will help standardize this as well. And then the link to that, I think, is the role that institutions can play in this, which can be really valuable to be able to de-risk some elements which maybe the counterparties themselves will find hard to agree a position on. can a third party take some of that risk on for them?
Yeah, no, indeed, I agree.
Conscious that we've got some questions stacking up as well. I think we had one question around pricing, which maybe, Dominik, you answered already, but maybe we could just have another go at. Is from Juan, which is, would you expect comparable discounts over capture prices for corporate PPAs and utility PPAs? Would utilities usually apply greater discounts? I think Juan's trying to get at, I mean, it could be two things there. One, it could be the shaping and balance discounts that apply to PPAs, which I think you would expect that to be done by utility anyway, and broadly similar between the two structures, but could vary. I've seen it vary. The others, how is the pricing working for corporate PPAs? Is it done against market, or is it done against the value and the returns of the asset? And I'm definitely seeing a shift from thinking about market pricing being the benchmark and where you work from, you know, what a wholesale price is doing, versus returns, a little bit more open book as well. I've seen one process in the last few weeks where the developer and the corporate have run an open book process. Yeah, they've agreed the price based on a common financial model where the return is an input to it. Upper parties agree all the parameters that are going in. So the cost the developer develops and the counterparty checks it. And I think that's an interesting approach to say, actually, it's based on the cost of the project. Let's agree what the input assumptions are and what we want to, rather than agree a price. It's one way of getting the price, of course. I don't know whether, Dominik, you've seen something similar shift in the mood around this.
What you described, I haven't seen it in such detail, but that's also my perception that basically we see for very competitive projects that basically it's not, you don't look at the power market, because you might have very different views on the future development of the power market, on the future development of capture prices. So, but you just take the other way around and make sure that the developer gets a fair share of the cake. An interesting development that's currently ongoing is, and we don't know the outcome yet, but when we look at the Spanish market, we saw recently the public auction, the renewable energy auction by the government closing, much lower than what we have seen in PPA deals a couple of months ago. So, and what we have heard from the market, we haven't seen the results yet, but that several players are reconsidering the pricing. So basically, off-takers are reconsidering the pricing because they see somehow it seems to be possible that we can procure these projects much cheaper because the government can do it cheaper.
Wow. Okay, that is a big change in the market there. Yeah, really interesting.
I mean, let's see whether it really changes. Yeah, but at least that's we got signals that there is movement. But if it changes, it might be a significant change.
Yeah, see that.
And I guess a question back to you guys would be sort of, you know, how much of that difference between what corporates are paying and what's clearing in the auctions is driven by cost of capital? You know, in terms of sort of how banks view the bankability of a corporate PPA versus an auction.
Yeah, it's one for Dominik, really. How's that priced? How's that being priced in? Or you're not looking at credit? I've seen a variety of approaches, I must say. I'm not sure it's explicit as that, Shane, either. Because there's so many difference in structures between the government structure, whilst Dominik's thinking, right, about what a good answer might be. I'll give him a hand by stalling for some time. You know, I think there's a big difference in structures between corporate PPAs in markets and government PPA or government-backed PPAs. And I think some of the structural differences and in the nature of the auctions and, you know, where the grid connections, all those things make a big difference.
Yes.
I don't think you can read across directly from one to the other.
I mean, to be honest, I mean, first of all, it depends on the government, I guess, yeah. And even those with very solid public finances have made retroactive changes in the past to some of the support schemes. I mean, France recently had a discussion on this. So, and I think there's a difference in the risk perception of domestic investors versus international investors. At least I see that from utilities. That utilities are often more comfortable investing in their own home turf. And then I think it's what Elish says, that a lot of factors playing or coming in. So But I'm not so sure if you compare some of the very big corporates and tech companies, whether they are less creditworthy compared to some of the governments.
Some of the governments out there, yeah, I was about to say, I think that's definitely true, Dominik. Very politically said. Shane, should we just let's pick up to closing? I recognise we've got a minute or two left now in our allotted hour, so maybe some closing remarks from you and some closing remarks from Dominik, and then unless there are any other questions, we will call it a day.
Sure. So we've just tried to sort of summarize some of our closing remarks on what we see as call to actions from different groups in the commercial PPA market. So, from developers' perspective, recognizing developers are already very active and very keen on this market. Seek early engagement with off-takers. Off-takers are still quite often not educated on what the risks are, and therefore, it just needs to be recognized that deals will take time to complete. And as we just talked about, being open about price levels and risk from the outset will facilitate deal execution. From the off-taker, from the large energy user's perspective, escalating beyond the procurement function early to strategic decision makers and to risk managers is key to making sure that these live deal opportunities don't get stalled or at least can be sort of nipped in the bud early if they're a no-go. And similarly, invest time and resource in understanding contractual risks associated with price, volume, and shape under different economic scenarios. Obviously, we being advisors, we would say that. From utilities perspective, innovating on productizing PPAs in order to drive some of that change of mindset around additionality. And also in order to as a result to access some of the middle market beyond the big global corporates, and also potentially collaborating with financial institutions on how to manage some of those risks. And from financiers, innovating on credit risk aggregation, whether that's public finance or private finance, it should be possible. It is done in other industries. And also there's potentially a point around learn from other European countries where risk appetite differs. So we see much more risk appetite from banks in Spain versus in some other European countries. And finally, from policymakers, working with financiers to develop these credit risk management solutions, harmonizing PPA expectations with auction strategy. So auction facilitates rather than hinders PPA activity. And then standardizing what it means to be a commercial PPA and broadening it beyond the definition of corporate PPA.
Excellent. And Dominik, your closing thoughts, implications, so what of all this?
So maybe just one point. I think it's one of the most fascinating parts of this whole energy transition, as it's basically mainly on purely by private sector driven energy transition. I mean, that's ultimately what a PPA is. And there are so many topics coming together, decreasing, so market fundamentals, decreasing technology costs, market structure, public policy, all in this topic, all influences it. I personally think PPAs are here to stay. However, I don't see the curve just going like this. It will be a bit bumpier. There's still a lot to learn, but I guess it will be some exciting way forward. And yeah, we will continue working on it as EIB and try to support it and get it off the ground as much as we are able to do.